Thank you for those trading ideas. iShare has been a performing stock. In fact, it hit a fresh high yesterday and today also. iShare has trended up very smartly in a very ordinary market. So what is really what really has done the trick for iShare Motors, and what is the way forward for company in the moment, and what is the response to some of the key new launches? Let's discuss that, and to do that, let's connect with the CEO himself, Siddharth Lal, Managing Director of iShare Motors. Siddharth, good morning, and thank you for joining us. You just launched the Grand Tourer Continental GT. How do you see demand in this segment, and how do you plan to position it exactly?
It's a new type of motorcycling in India. It's a cafe racer, which is from the 1960s in UK, where motorcycling was really at its best and most fun. So we've recreated the entire idea of freedom on two wheels and in a sportier type of environment, and so we've got this lovely new cafe racer. And the cafe racer comes at, we believe, a really interesting and attractive price of 2,04,000 on road in Delhi and 2,14,000 on road in Mumbai.
Siddharth, hi, morning. So what kind of growth do you see in Royal Enfield, and any price hikes which have been planned?
Yes, so at Royal Enfield we've actually had a really good run for the last 3 years. We've been growing at above 50%. So our demand has been very strong. We're trying to grow our production also to the same level. So our production has been really the constraint over the last few years, and as recently as the last quarter we've had a unit growth of over 60% now. So the production rates have actually been, or let's say the demand position is really strong for Royal Enfield, and we expect that to continue through the next year, where we're expanding our capacity again from what was 175,000 in 2013. We're expanding it to now 250,000 in the year 2014.
Right. Siddharth, you always tend to associate iShare with motorcycles, Bullet, Royal Enfield, but the CV business also has done rather well for iShare. So in the CV side, how many new products are you planning to launch in next 2 to 3 quarters?
Well, we've got a lot coming in on the CV side, and you're going to see, all of that starting December 2nd now, which is the announced date for our entire new series launch. So, we'll tell you more about that at the event next week.
Siddharth, do you see the CV market still remain weak going forward? Give us a sense on your current production levels.
Well, I've actually been of the view that it, in the last quarter, or in October to December quarter, my view was that it would probably bounce back, but it absolutely hasn't. It's been continuing to fall, which is really difficult for all of us in the CV industry. So I'm not making any more future predictions on this. I mean, at some point it's got to bottom out and start growing back, but we don't see that position as yet.
Okay, fair point. Well, the present is volatile. Why get into predicting the future? So how do you see the CV market panning out?
Well, that's really the good news as far as we're concerned, because our business model has been extremely strong, and it's panned out very well during a down cycle as well. So even though the market is down tremendously, we've actually been able to increase our overall CV market share substantially over the last year and a half or so. And we are now the most profitable CV company in India altogether. So we are making, even at the bottom of the cycle, we're making over 6% operating margin, whereas none of our competitors are making anything close to that. So yeah, our business model is really panning out well, and we believe that as and when the market comes back, we've been investing tremendously into our product, into our aftermarket, in every single aspect of our business. We should bounce back much faster than anybody else in the industry.
So what kind of growth do you expect from engine supply to Volvo?
Well, we've just started commercial production of our new engine series, which is a powertrain, which is a global powertrain for the medium duty platform of Volvo, and we've just started supplies. The first phase of production is going to be 25,000 units, and that's going to be achieved somewhere in the next year and a half or so. So we're ramping up towards that production target, and of course the overall capacity of the plant that we put up with certain additional investments will be all the way up to 100,000. So we're at phase 1. We're going to play that out over 2014, and hopefully beyond that we should start growing again beyond the 25,000 number.
So how do you see discount and price trend in the heavy CV market?
Yeah, the CVs is because of the downtrend and because the market has been falling so rapidly. A lot of our competitors have been throwing a lot of money on the table, and it's reached really high proportions. So there's discounting of even up to 15% plus in the CV industry. However, as you can see in Eicher Motors with our subsidiary V Commercial Vehicles Limited, we've been able to largely maintain a slightly better pricing structure than our competitors, which has resulted in a better operating margin. So while we've also had to bring our prices down because of competitive pressures, we believe we're doing much better than the others in terms of in maintaining some semblance of a price in the market, and that's helping us in keeping a good operating margin.
Siddharth, appreciate your time and thank you for joining us. Eicher has been a very, very strong and a trending stock. It's been a big wealth creator, and let's look at some numbers here. It was languishing at about 500 rupees or sub 500 rupees in 2008, and if you have the 5-year chart and if you just look at the 5-year chart, you'll be surprised with the price action here. 52-week change, pretty reasonable, not out of the box, up only 70%, but the 3-year and the 5-year price chart, and if you pull that up, you'll be surprised with the action here. That's the 52-week chart here. Let's see if we can get down to the 3-year and the 5-year chart as well. Mitesh, Eicher has been a dream stock for a trader and an investor.
Well, that's correct, and I think still looks strong. One is that the stock has been continuously making newer highs, and we have not seen any kind of slowdown. I think a good way to now trade the stock would be to trail stop at about 4150 and hold it out. I think the stock can even test levels of around 5,000 on the upside.
Okay, commodity markets too have kick-started trades, so let's quickly bring on board Manisha to talk about the highlights. Manisha?
Thank you so much for that, Aisha. Well, we have seen the dollar index yet again decline.